Now time for exercise 6-15A. We have a bunch of data given to us, and we have two requirements. One, to journalize their inventory transactions for the year, and two, to report the ending inventory, sales, cost of goods sold, and gross profit on the appropriate financial statements. Let's get started on this one then. First of all, we're writing the journal entries. The first journal entry, we're under requirement 1, journalize the company's inventory transactions for the year. So the first journal entry is going to be purchases of inventory. We are going to debit inventory for the $46,000, credit accounts payable, and I've circled in red what the amount is. And remember, on account means it's either on accounts payable or accounts receivable. This company's purchasing inventory, so it's going to be their debt, so it's accounts payable. So when we purchase inventory on account, we are always going to have this account inventory, this journal entry, debit inventory. It's an asset, it's increasing. Credit accounts payable, it's a liability, and it's increasing as well. On my sheet for the exam, I would write this journal entry. In fact, all these journal entries we do on this one. Okay, still on requirement 1, we need to do another journal entry. So the next journal entry is to account for the sale and the cost of goods sold. So this actually requires, when you have a sale, you have two journal entries. The first one is to account for the sale itself. So it tells us sales of inventory were $75,000. So we had sales revenue of $75,000. There's that credit in that first entry. So we're going to credit sales revenue for $75,000. We have the $75,000 here. Credit that. Now, we got part of that in cash and part on account. It tells us in the table 83% of that was on account, 17% for cash. So I'm going to take the cash first. 75,000 of the sales times 17% gives me $12,750. Accounts receivable, 75,000 on our sales, 83% of those were on account, so 75,000 times 83% gives me 62,250. Now if I add the 12,750 and the 62,250, I do add up to that sales revenue, so I'm in balance on that first journal entry. So that first journal entry is for when we're selling to customers, and that's for the sales price. The second part of this, when we make a sales, we also need to remove it from inventory. So what we're going to do, it tells us the cost of those sales in the table. It tells us the cost is $39,000. So we're going to debit cost of goods sold. Remember, that's an expense account for $39,000. We're going to credit inventory to reduce inventory for the cost of it at $39,000. Now we're on to requirement 2. So again, those journal entries that we just did for requirement 1, I would have all those journal entries on my sheet. The next one says report ending inventory, sales, cost of goods sold, and gross profit on the appropriate financial statements. So let's get started on this one. First of all, okay, we have balance sheet. Now, balance sheet. Inventory is going to be shown under current assets on the balance sheet. How do I get my 17,000? I'm going to take my beginning inventory of 10,000. They give me that in the table. That's the very first number. Then I'm going to add the debit I had to inventory in the first journal entry I did of 46,000. So at this point, go back to that first journal entry we did, and you see a debit for inventory 46,000. Then the second journal entry we did just 1 or 2 slides ago, we had a credit to inventory for 39,000. So if I take the 10,000 beginning balance plus the 46,000 debit from the first journal entry minus the 39,000 credit in the second journal entry, I get 17,000. So my inventory is on the balance sheet under current assets at 17,000. Now, on the income statement, what we're going to have is we're going to have sales revenue. Sales revenue is given to us as 75,000 in the table, and we had a journal entry to sales revenue as well. Cost of goods sold. Cost of goods sold is that cost of inventory they gave us of 39,000. And so if I take sales revenue of 75,000, subtract my 39,000 cost of goods sold, I get gross profit of 36,000. And that's what I will see on the income statement related to these items. That's it on that one.